Righto, money miners. Bloody the infamous IGO. Quarterly is here.
Mate, this is a big IGO day.
Top of the story.
Huge.
Is it IGO or IG low?
It's Ivan Vala's first analyst call. So he was 6 weeks in the job, and what a absolute storm to face. The analyst call was wicked. We're going to play a bunch of snippets. Some big news, Cosmos on care and maintenance, unsurprisingly, but I can't wait to talk about that one.
Mate, talk about trial by fire, far out.
Yeah.
Anyway, right, what else we got? We've got some bit of advancements on the old Cali Metals story. My prediction of one of the shareholders was incorrect. We've got the correct information. Love it.
You'll have to clarify, Matty.
Liontown update, Peninsula funding dynamics, a bit from Red 5 Westgold quarterlies, Galena, looking a bit grim, eh?
Yeah, I think we've got Sayona in there as well. A lot of it's the last day of quarterly reporting, and if we aren't talking about you on the show, it's probably because you're submitting your quarterly late and you suck, and we will shame you tomorrow.
We will give you a mention tomorrow. Even the ones
you won't be forgotten.
One of the ones I got shares in even did it. So,
no.
Right, but now speaking of the Westgold quarterly, I was looking through. There's a bit going on in the old Westgold traps, but with this future direction, I'm left with questions. I have a lot of questions. I want answers, and you know why? Like, look at these. I see these pictures every bloody announcement. So there's sub-level cave, Paddy's flat, Bluebird, Starlight, even this geophys data. Look at this, because if you look at that, I look at that, I don't know what the hell it means. Mate, I can tell you that right now.
If you don't know what that means, then I'm up ship creek, mate.
The punters don't have any hope. Even some of the high-level investors mightn't have any hope with that sort of stuff. And I'll tell you, you know why this is a problem for me?
Tell me.
Two-dimensional. I'm a 3D guy. I love it. I'm 3D. I need to see things with my own eyes, three-dimensionally, to really make a good decision.
You've got a point. I don't know any 2D mines in existence, so you actually have a very good point there, Matty. 3D would be the way to go if you're a visual person.
Some of those gold mines that are approaching 2D, they're that thin. Anyway, we've talked about them before. I'll tell you the answer.
Tell me, Matty.
That will solve Westgold's problems that they have given me with this two-dimensional stuff.
Yeah.
VRIFY. We present to you, the money miners, VRIFY. Mate, the 3D solution that is just going to bloody capture the hearts and minds of investors.
This is a pretty wicked piece of technology.
Mate, why don't we just show the bloody punters what this technology is? Let me show you how this 2D can be translated into 3D. Check this out.
It's pretty bloody mind-blowing, mate.
Have a bloody look at it. This is the lay of the land. Look, you can go underground. You can bloody, mate, the rock lickers can check all the bloody different types of rock types there, the lithology, the host rock. Mate, unbelievable. Check where the old workings are. Mate, zoom into the bloody drill holes here. Know exactly in 3D what these drill holes are, where they are in space, not just the 2D interpretation of it, how that then makes a bloody ore body interpretation. I'll tell you what, boys.
It's amazing.
I've said it before, but holy snap and duck shit, this is going to bloody shake up the industry.
It's interesting, right? Like, we've collectively listened to thousands, I reckon, of MD presentations over the journey. They all use a bloody PowerPoint, mate, and it's kind of staggering to think that the mechanism of delivery for actually describing these three-dimensional ore bodies and mines has remained literally the same in a bloody 2D PowerPoint deck for decades. No. It's time to freaking get with the times, mate.
Mate, I've seen at conferences lately, there's a couple of companies that have really come on board.
Have they?
Big bloody Bellevue were using VRIFY probably a year and a bit ago to tell their story. There's some companies out there with great stories, but the thing with VRIFY, the one deterrent with going 3D, you can't hide all your bullshit now. That is one thing.
Be suspect of the companies not using VRIFY. I think that's the shout out, Matty.
Yeah,
and Bellevue's a great example.
If you aren't using VRIFY right now,
hashtag unverified.
They are unverified. I like that. That is going to get a run. I have my eyes on you.
Yeah.
What are you hiding?
Well, they might just be.
Show me the 3D.
It's not enough to just ask for cross sections anymore, mate.
It's not. We're taking cross sections to a whole new level. So, mate, take your investors on a tour of your mine. And I'll tell you what, after considering we did that bloody podcast in a pit with Westgold and where they fluffed themselves up like no tomorrow, I would consider it fair that Westgold just repays me and gets on to VRIFY. I would consider us even after that. Mate, it's just the future. I bloody love it. And I can't see why every mining company with a good ore body shouldn't get onto it, because if you're not on it, you possibly don't have a good ore body and you will get found out. So, mate.
It's a game changer, this one. We're really stoked that they're partnering with us and sponsoring us. We think this is a real net benefit to the entire industry, and we hope the West Australian mining community really embrace it, because we love it, mate.
We love it. Mate, just take action. Sex up your mine and turn it into a 3D masterpiece. And it's just not a presentation tool. They bloody help you with all the data. They can get all your data and convert it into this. It's a bloody brilliant solution, mate. Get on to grant@verify.com. Now, no E. Don't type verify. It's VRIFY.
No way. Verify with that.
Chuck his email in the show notes. Get onto it. Mate, tell you what, we go through a big vetting process for this, and we're confident on this one. I love it. Boys, speaking of probably confidence on the inverted way, IGO. What is going on with IGO? The quarterly's out today, and another grim one, it appears.
Yeah, it didn't look pretty. And you pointed out, Matty, 5 minutes before we had the quarterly come, we had a Cosmos review, which we knew was underway. And, not surprising, the operation's going into care and maintenance there. So
yeah, I can't find the exact rule on that, but I'm pretty sure that you can't put new material information like that into your quarterly. It has to be before. You can't. The quarterly is like what happened in the quarter, not what is new information. So I'd say that's why that was in a separate announcement. I think
you're on the money there. I hadn't heard that one, but that stacks up to me. And
you can't put new drill holes in a quarterly. Like they have to be released prior. So that's I'd say that rule pertains. Right, JD, the Cosmos review. We knew it was coming. Take us through it.
Mate, it wasn't pretty reading, although I think, between us and most of the people in the industry, it's not really surprising, but it's hard to think that 18 months ago they bought this thing, $1.3 billion. Obviously there's a couple other assets in that Western Areas portfolio, but this was the flagship one, and it's just gone shocking. If you include Forestania, we're expecting a further impairment of sort of midpoint $175 million in the financials to come out next month. They've essentially written off the whole acquisition that they did. And here's the kicker. I'm not sure what you guys think of this, but another $107 million went out the door at Cosmos pre the care and maintenance decision in the last quarter.
Yeah, well, remember they halted when they halted shaft construction. I'd say there was some creditors that needed to be paid.
Yeah,
leading up to that.
Yeah, I mean, the whole sequence of events doesn't really reflect too well on the company, but I can't understand why they wouldn't have, done everything they could to at least slow down spending throughout the process whilst they knew it was, under review and, with pretty ominous signs all around the industry. So just thinking about the acquisition and also, the acquisition that Wilo did, I would have loved to have been a fly on the wall just hearing, because I'm sure that the subject of Indonesian supply would have come up. And I mean, predicting commodity prices is a bit of a fool's errand, but it would have been just interesting to hear the thought process in and around what their thoughts were of Indonesian supply coming on, because they've clearly taken the view that the impact that has eventuated wouldn't be or wasn't going to be as bad as it's proven to be.
There was a phrase repeated on the call multiple times was it took us by surprise the pace at which it came on.
And the lack of progress towards any price bifurcation, because that just doesn't look like it's coming anytime soon, and that was probably one of their bets as well early on. So,
yeah, I mean, check out the words from the Nickel Industries boss. He said it's never going to happen, but we'll sort of hold our breath on that.
There's the other end of the spectrum, isn't it? Yeah, right. JD, what about the financials for the quarterly? Obviously, we're talking about free cash outflows here, I think.
Yeah, not pretty. Let's rip into the company as a whole. So the cash position at the end of the quarter is 276 million. That's down 38% quarter on quarter. So like you say, negative cash flows all around. So from operations, we're talking about negative $31 million. In terms of, the various items that went out the door, you've got another 51 being paid on stamp duty for the Western Areas acquisition. That would have hurt. And then you got a bit of debt being repaid over the quarter. So free cash outflow, it's not a term you want to use, of $96 million.
Jesus.
So the company was pretty keen to stress the $720 million debt facility that they got. So
This is a revolving credit facility, right?
Yeah, exactly. So they repaid some debt, and then they had this facility in place, and they've cranked it up. So I mean, it was a bit reminiscent of the MinRes call that we listened to last week, and they just wanted to really reassure investors that they're not going to be in any trouble on the cash front. So, I mean, we'll get into more comments from the Q&A later on, but all up a pretty awful quarter. Not entirely surprising. I mean, it's hard to flog a company for things out of their hands, but a lot of the things in IGO's case were very much within their control, and they just haven't been up to scratch.
Yeah.
They're probably trying to also highlight that they've got liquidity to actually rebuild the company because at the moment there's not much prospects on the horizon besides Greenbushes and a nickel turnaround that may or may not happen in the short term.
And to clarify, that debt facility is undrawn currently, but it's still a bit confusing what their actual leverage of the business is, because a lot of there's debt that hides behind the black box that is the joint venture that they have, which we've got very little visibility into.
So where's Greenbushes at, JD? What happened there?
So on the Greenbushes front, spod production of 358,000 tonnes, that was down 14%, and then cash costs up 36%. So we spoke about it a couple of days ago, but they were already earmarking that spod sales would be much lower than production. And like we spoke about the other day, Matty, lower production, more often than not results in higher unit costs. So in their example here with Greenbushes, they had lower production as a result of fewer tonnes going through, as well as lower grade being processed. Now the Winfield JV, which is the one between Albemarle Tianqi and IGO, they decided not to pay a dividend pending calendar year 24 budget and plans. Now, they clarified on the Q&A this morning that this wasn't actually a timing thing. It was, in their words, a prudent measure to maintain the working capital within the business during this volatile time. So, not very reassuring on that front.
Yeah.
Getting into Kwinana, guys, that's another just awful thing to really talk about and think through if you're an IGO investor. I mean, the real question is, when does this thing, or how does this thing start generating cash? It's pretty concerning when you start reading through the announcement today, and it says the plant had several days operating at around 40% of nameplate, as if 40% is some sort of achievement. It produced 617 tonnes, and nameplate is 24,000, so that's virtually flat quarter on quarter. And they also mentioned that no hydroxide was actually sold. So all up, Kwinana had EBITDA of negative 170 million for the quarter. And you're not getting a lot of confidence reading the announcements that the company's actually going to solve any of these issues.
And I think if they produced 617 tonne but didn't sell any, and we know hydroxide's got about a shelf life of 6 months, I think.
Yeah, that question was asked on the quarterly as well, and they said they would look to sort of sell it in the next quarter.
There was an amazing quote in the Q&A as well, relating to we still don't have confidence in our ability to predict, improvement there. We don't have confidence in our numbers as it relates to Kwinana at the moment. So a lack of guidance on how fast that's going to improve as well.
So on the nickel front as well, just to make matters worse, given they have other nickel operations, you got production guidance has been revised lower, as well as costs being revised up. So at the end of the day, I think the market saw a lot of this coming. So the stock traded down almost 8% just after the open, but finished roughly flat, down a couple percent. You could perhaps guess that shorts might be closing out positions, although they didn't actually have a massive short interest in the stock. Only 4% of the shares on issue were sold short. So Let's rip into a couple of the best questions and play some snippets from the Q&A. First up on the balance sheet front with regard to the Winfield JV, you got Kate McCutcheon from Citi asking the question.
It's been a while since we've had an update on the debt and some of those metrics sitting inside the JV. Is that something that we could possibly get in the future?
Look, that sits within the joint venture, and as we've advised previously, we don't provide that guidance to the market because that is within the joint venture.
What do you guys reckon about that one?
Mate, I think the response is a bit of a joke, to be honest. Like the capital structure and the balance sheet of the JV is seriously important to, the cash flow potential of this company. That's information that the market should know. It's just kind of bizarre that there's no update, no insight, no ability to really get better numbers as it relates to what the situation is, with that joint venture.
Could not agree more, mate. The next one up is from Khan Pecker at RBC, and the question was regarding restarting Cosmos.
With Cosmos, I'm sure you've done some sort of initial numbers. What nickel price would be needed to reconsider remobilising that?
Yeah, it's a good question, and it's one I've been asking as well. There's some work to do. We need to take a pause and do a full study, look at that ore body, look at how we bring it back online, what it would take, what the conditions are, and it's certainly there's a price factor in that, but there's other issues that we need to think through as well.
That was pretty telling, wasn't it? I mean, just the response there, their worries, you can see it in the response there from Ivan that they're clearly unrelated to the nickel price. It's not about the nickel price necessarily, it's the ore body. And there's a further question on Cosmos. Here's a snip of that response.
In respect of the Cosmos, CapEx and everything. Look, this is hot off the press. We're working through that, and we will come back to you in the course of the next 3 weeks, probably at the February half, with a little bit more colour on that, but it's a little bit premature right now. Do you want to add anything to that, Ivan?
Well, yeah. I mean, as Kath said, we'll come back with more. The ore body, AM6, AM5. We need to really understand where they might fit into the picture.
Confirmation there. Ore body. You heard it from Ivan himself. Timmy Hoff at Canaccord, who has had a sell on IGO for a while, was calling for the board's head to roll. In his first question that he put forward, you could deduce it in the wording of his question. Did you guys catch that one?
You're putting the pressure on Ivan to throw the knife in early. Let's play it.
In your review of the acquisition, Ivan, can you give us a bit of an outline on what you think went wrong? And obviously nickel prices haven't helped, but do you think there was enough due diligence done on the asset and ultimately the board approved this acquisition? Was there enough done at that board level questioning the quality of these assets?
Ivan's response was a straight bat, just stating review was underway. It was professional, but the way I interpreted the response was a bit differently. I'll tell you what, guys, how I thought the response should be interpreted.
Paraphrase what you think was in his head.
I reckon this was, the IGO board just stood by me amid my departure scandal at Rio, and you want me to shitbag them on this call? Fuck. And there's one question that unfortunately didn't get asked, despite me submitting it in the webcast, was around that revolving facility that was upsized in the quarter. I want to know what it's for, right? And like we played just then, the dividend has gone. So this working capital is it for prudence? This facility, we couldn't see into the black boxes, the JV financials, but if we could, maybe we could build a better picture of what the RCF's purpose is for. But the other possibility, of course, is M&A firepower. It'd be pretty rare to see a new CEO just have the ability to be pretty bold on the M&A front immediately into the job. But the analyst still asked what his outlook would be for other assets and commodities. And this is what he had to say.
We're in the business of battery minerals. That is more than lithium and nickel.
What do you guys reckon? Reckon he's going to buy something with copper?
Oh, well, but remember when the unfortunate passing of Peter Bradford and the interim CEO was in and we were saying, oh, look, they're going to be finding their feet for a bit. They'll probably be quiet on the M&A. Now they've got a a new CEO and we're saying, oh, is he going to buy something? Like, they need to bloody start getting active because they've been at a bit of a stalemate for the last couple of years, really. So,
yeah. I got the perfect M&A pitch for IGO guys for them to diversify away from
ticket clipping time
from lithium and nickel. I reflect on the business now, and I'm just writing nickel off entirely. It's just a lithium business. And what is the lithium business? Well, I'm going to write Kwinana off entirely as well, and I'm just going to look at Greenbushes, which is a non-controlling minority interest in a tier one asset. Like, there's no doubt. I reckon they should get another one of them. Maybe buy 30% of Tropicana. Oh, wait, they used to own that. They could own two of them.
Maybe they'll go for a third non-controlling interest in Kathleen Valley.
Oh, who knows, Matty?
Looking for a bit of cash and involvement. Who knows?
There's one last snip from the call I want to play here. This one is just a section of the question from MST financial analyst Matthew Friedman. I don't know Matt, but by the line of his questioning, JD and Matty, he's my kind of guy.
But, I'm looking at corporate and exploration spend currently running at $265 million a year. That seems like an awful lot relative to, I guess, your operational footprint. And I don't think I'm being unfair in saying that the exploration spend has delivered pretty limited success in recent years. So,
and one question for you, JD. What were your thoughts on Ivan just from his first sort of public Q&A?
My first thoughts are that all companies should scrap that beginning of quarterly calls where they just read a script for about 15 or 20 minutes, because I almost fell asleep. It was excruciating to listen to. But then getting into the actual Q&A where you start to get a feel for the characters, he seems quite polished. He's come from Rio Tinto. They've got a certain way of handling things, and he even referenced that a couple times in regards to safety and various other metrics and how he's accustomed to sort of viewing at it. But at the end of the day, it's just the sort of first call, and a lot of this stuff has happened before him. So I think I'll give him a bit more time before I've really firmed up a view on what he's like as a manager of the company.
More to come. I want to see him get active, but we'll wait and see.
Now, Matty. There's a correction you need to make to a different lithium story that we've talked about on the show.
Now, I suppose the caveat was that I was doing a lot of inferring and assumptions, and I clearly stated wasn't direct, and I can't because it was directed at a lawyer. So I was probably picking the wrong person there to bloody incorrectly infer. But remember day one of the Cali Metals IPO, there was that 4 million and 3.5 million share block trade that we pretty damn confident went to MinRes.
Yep.
And we thought it was the 4 million could have been likely Tim Roberts, the multiplex fella that was the 4 million, and either Navitas's Rod Jones or this Jennifer Mary Robinson for the 3.5 million shares, assuming that they sold the whole stake.
But you mistakenly said that she was
I went down Google search. I'm like, Jennifer Robinson. The only one I found was Julian Assange's ex-human rights lawyer. But apparently, according to the West Australian, they've revealed that this mysterious Jennifer Mary Robinson was in fact, and still is, Chris Ellison's mother-in-law, which is much juicier than Julian Assange's old lawyer. So but it said the article said she sold down her stake substantially, which indicates she might not have sold the whole stake.
No.
She must have sold. You would assume so, but it just said substantially, so it didn't specifically say. So that's in that block trade, the 3.5 or the 4 might have been pulled from major shareholders together. Don't exactly know if it was just one person, but
maybe the West is just covering base for
correction to my previous inference.
I don't think that correction makes the optics of this story look better, Matty.
Makes it look a lot worse.
Yep.
So anyway,
speaking of bad optics at the moment, JD, bloody Liontown's quarterly's out.
Going from one to the next. I was very eager to rip into the Liontown quarterly this morning. I was hoping they'd come up with something, regarding the funding that we chatted about last week, but I was left a little disappointed. I did see that the project was 72% done, and like we've spoken about, we want this project to go well and get up. So it's good to see it's tracking along, and for the company, all they can do is make sure this project is done on time and on budget. Otherwise, they could be in a bit of strife. So it's good to see things progressing. On the financing front, they ended the quarter, December 31, with $517 million in cash. And like we'd said previously, fully drawn that facility that they've got with Ford. But we know there's a shortfall, so keen to see how they sort of look to plug that gap. They said we should be able to find out by the end of Q1. So hopefully within a couple months, we can see what sort of solution. And can't help but notice that there's a few rumours swirling around that Gina's pause, that sort of 4-month period in which she can't do too much with Liontown, is almost up, but there's not too much substance to those rumours. But hopefully for the Paddy, there is some substance behind them after all.
I think Spod's still sitting at about $860 US a ton on the numbers, so it's hasn't really, it's stabilised, put it that way, based on however much is getting sold. But it's not moving anywhere at the moment. So
those murmurs, JD. Like if you were Gina, right? Would you let's say you wanted 100%, would you lob a takeover bid for 100% in after February 11th when you're allowed to, or would you offer a funding solution at pretty extortionate terms that maybe led to you getting it even cheaper?
Extortionate, I like the use of that word.
We'll have to sort of wait and see what she decides to do. But Gina notoriously plays the cards very close to her chest, so I don't think we'll be getting any leaks out of her.
We'll just leave the speculation up to us. Who knows? Come on, heat. I just want it all to heat up because, geez, it's good for business. I love it. Right, on to the yellow cake a bit, boys. Peninsula, what's going on here?
Mate, we couldn't leave the yellow cake unspoken, and Peninsula is juicy because we spoke about them a couple months ago in November, and they'd done this capital raise because they'd been left up shit creek a bit given that UEC had sort of reversed or reneged on the previous plan. So opening the announcement today, I've got a couple questions. First of all, we know they had to deliver some uranium sort of in line with their original timeline. And secondly, I was keen to see how they're going about fixing that funding gap. So getting into it, they raised at 7.5 cents in November, but that wasn't approved. That needed to be approved at an EGM, which happened at the beginning of this month. And along with that 7.5 cent raise, all the participants got an option, a sort of 2-for-1 option, which are very much in the money now. So the revised restart time is for December 2024. So we're pretty close, and they did say that funding will get them to first production, but they need that to sort of cover that working capital low point. So on the funding, they've got 18 million in cash, but like I just said, after the quarter, they got 60 more in the door, and they're going to get 40 in from all these options that are going to be exercised. So
are those oppies even going to be exercised? Because they presumably have like a decent time to expiry, and typically people just sit on them for as long as possible.
Yeah, that's the right question to ask. The common strategy with these options is that you sort of hold them on for as long as possible, even if they're in the money. So
unless you want to sell the shares.
That very well could happen depending on which way the uranium price runs. So looking at the company's wording for how they're going to plug that shortfall, they say the company intends to augment funding with other sources, including term debt, offtake prepayments, and/or working capital facilities. So, you don't see the word equity there, but let's see sort of where it comes from. Last time we did the numbers on the back of the envelope, they needed roughly Aussie 50 to plug that gap. And I wouldn't be surprised in this environment whether they can get that from some sort of utility in the form of some sort of prepayment, although cognizant that they have already got some obligations which they'll need to meet.
Yeah.
The other really interesting aspect of the announcement today was the uranium contracts. Now, we know they had they had roughly $12 million US worth stored up, but they had a bit more than that. And if the customers at the other end didn't want to play ball, they would have had to have gone into the market, bought it. And we all know where the uranium price is these days. That could have been a super expensive exercise. But thankfully for the company's sake, they said they don't foresee a circumstance where they'll have to get in and buy any yellow cake in the market to satisfy obligations. So I think they've really dodged a bullet there, because that could have been an expensive exercise for them.
Let's hope that the actual ramp up is on time in the revised schedule. Otherwise, they might still have to do that. The one thing that stuck out to me is I remember this being quite there's a pretty big short position in this stock before, JD. Did you look into that?
Mate, I did. I checked it out this morning and it got to about 10% short interest and then it just drops off a cliff. And then you can sort of go back through the announcements and reach the outcome. So the money was raised in November, but like I said, they need an EGM for that to go ahead. So all the stock only actually settled earlier this month. And you can see in the space of about a week, the short interest drops from 10% to virtually nothing. So you can sort of work out that the short sellers have bid into that placement. They've got the stock. They picked it up at 7.5 cents, and then they can just sort of close out their positions. And I dare say they made a couple of dollars from that exercise.
When they do that, right, because if you were short the stock and you buy it back in the placement, you've bid into the placement. Now the placement came with these attaching options. So do the short sellers make money on the short and then also get to keep the option? They must do, right?
I had a feeling you'd ask this question, and I had the same question reading it as well. I think it's one we sort of got to pitch up to people in the insto world out there. My best guess would be that these guys get to keep the option because they're bidding into a placement which is done separately. But who's to know? The actual owners of the stock have quite extensive rights, so maybe they are the ones that actually get a hold of that option in the end. But if not, it's a sort of cherry on top of the cake for the short sellers in this case.
Totally.
All right, our next cab off the rank, the Goldies quarterlies, Red 5. The Red 5 quarterlies aren't as in high anticipation as they were last year, but still a close eye on it. What's going? So they've claimed to have made 23 mil in free cash flow from the operation. Look out.
Yeah, there's a bit more than meets the eye with these Red 5 ones. You've sort of got to read a fair few footnotes to get a good feel for what's going on. But you're dead right, Matty. You read that 23 million in free cash flow. That doesn't sound too bad. And they maintained their FY24 guidance for 205,000 ounces at an all-in sustaining cost of around about 2,000 Aussie, plus you got growth capex of midpoint 43 million. So those ounces are down slightly quarter on quarter. An all-in sustaining cost 2,330. Now that jumped out straight away. That's concerningly high. But you read in a bit more and they claim it's the result of a change in accounting. So they say this added another 270 Aussie dollars per ounce because of a non-cash inventory net realisable value expense. So
they're improving their accounting standards, JD. Oh, geez, it's almost like I'm going to not have to complain about some of their shitty accounting standards to come. Oh, no way I will.
I think you will, mate. So we'll get into that accounting a bit more later. But just to wrap up, let's look at the cash position. So in quotation marks here, net debt was reduced by $19 million. So they end the quarter at $50 million. Actual debt is $103 million, with $10 million being repaid in the quarter, leaving them cash of $53 million. But let's get into that net debt number a bit more, Trav.
Mate, I'm going stir mad at all of these footnoted net debt in quotation mark numbers. Of course, I pulled up in yesterday's show 2 companies that had done it, and I was just a bit annoyed. And then today, this one is a piss take in my opinion. So net debt position, footnote 2, go to footnote 2. Net debt is gross bank debt less cash, bullion, and gold sale trade receivable from 29th of December 2023. Gold sale. Net debt 49.5 million, but that footnote, mate. Red 5 is a habitual culprit here. Like, you're already stretching it, in my opinion, to throw your bullion inventory into that number. If it wasn't gold, that would be completely unacceptable. But to include trade receivables, mate, like, bloody hell, that is like completely unacceptable. It's your net cash as at 31 December. If you didn't get cash then, it's a working capital adjustment in your next period. It's just not the freaking way it works.
Yeah, mate, I'd ask the question, when are they going to get pulled up on something like this? But I think we could be waiting a while if we're waiting for that to happen. Looking at the waterfall chart, I'm sure you took a peek at that one as well, mate. Now, it's actually improving. It's in saying that come from a pretty low base, but they've got loan repayments of $2 million and then $8 million in the coming quarters, and then another $30 million due by December 2024.
Yeah, and you look at that waterfall chart, and it tells a rosy story, but again, like, I get shitty at the base number in their closing balance, right? What's that include? Cash, bullion, trade receivables for the gold sold 29th of December again. So Like, how many other companies do you guys know that lump in trade receivables into the base of their waterfall chart? In their annual report last year, they literally used a non-IFRS metric for cash and bullion by lumping in $10.1 million trade receivables in there too. And it just absolutely shits me. Like, if you cast your mind back to our coverage of Red's full year reporting at the end of August last year, I went and looked at their trade payables to see if it made sense or not. And in this quarterly, they explicitly include the sentence that trade creditors continue to remain within normal trading terms during the quarter, just to reassure us. Like, why do I get so worked up about this? It's because I just want to know the real number. Like, tell me the real number. They say $41.7 million of that is actual cash, both restricted and unrestricted. They don't separate the two, by the way. And if you look at the annual report, they had $15.7 million in restricted cash at 30 June last year. So if that's the same, the real number of usable cash at 31 December was $26 million. And if you include receivables in your cash reporting, the thing that, like, for someone like me, and there's plenty of people like me out there, if you do something like this, I'm going to assume the worst. I'm going to assume you're hiding something. So the operational metrics actually look good, right? But if you do shit like this, I'm going to assume the worst and that shit's not good. And I'm going to be cynical, and I'm going to be like, what are you hiding? Why are you hiding it? And so just fucking stop doing it. It pisses me off. Report real numbers. Fuck.
Oh, glad you got that off your chest.
Love it, Ricardinho. Love it.
It just doesn't look like I know the underground, it looks like about 14-15% of production, but the grade just doesn't appear to be near what they claimed in their reserve either. So it's just a question in that underground to see if it's actually delivering, because I think the reserve grade was above 2 for that underground. They've only claimed about 1.5. So I know some of that's development ore, but yeah.
They're still making cash. They're doing another cutback right now with putting growth capital into it. But yeah, you're right, the underground bit's going to be interesting.
All right, boys, Westgold quarterly out. Trading pretty flat. I suppose the news out of that one was Paddy's Flat is stopping production and going into exploration only for they want to develop a 3 to 4 year plan before turning that back on. So replacing it with the Fender production that's they've just recently restarted. They were really focusing on the term transitioning to an exploration phase. It's technically not care and maintenance because there's still drilling going on there. But I reckon, listening to the investor call, I reckon Wayne Bramwell had it in his head. Don't say care and maintenance. Don't say care and maintenance. Don't say care. Let me play it for you.
Show me what you mean.
There will be some holding costs as it goes back to a drill out.
There you go. I reckon it was in his head. Oh, no.
Mate, that's ripping. I reckon if we were doing one of those translation shorts, we'd have to chuck that one in as a translation, quarterly translation.
Oh no, you can tell that I did the Westgold section and you did the Red 5 because I'm about to go through grades and ounces and everything, and you just are all cash and trades and everything. So you know who's done each section.
Yeah, someone understands the mining. The others,
he's like, fuck that shit. Yeah. Anyway, so look, numerous operations, a couple of their operations had a bit of a drop in grade compared to the previous quarter, and hence their higher all-in sustaining costs. But they were saved by the realised gold price this quarter, Westgold. So look, September quarter they realised $28.88 per ounce. This one they $30.41. So
it's a juicy uplift. Yeah.
On revenue was only down $3 million on their last quarter, even with the drop in ounces. But look, that realised gold price, that's an extra $9 million in revenue based on this quarter's gold. So that's the effect that an extra $100 has. So look, Starlight outperformed, but you see Bluebird and Paddy's, their grades dropped by 25% for Bluebird and 49% for Paddy's Flat. Hence probably the decision where Paddy's is at the point they need to drill and find some better quality. So which saw the ounces go down a bit. So the old Fortnum processing plant saved the day. I was like, I bloody was part of I was on the crew that initially rehabbed that decline for Fortnum going down from the restart.
No, you don't hear much about the Fortnum processing
God,
facility.
I didn't know how to bore a cut before I got there. I knew how to bolt, so there was some wild declines going on at the start. God, Croshy fucking hated me. Anyway, sorry, Clint Phillips, if you're listening. So anyway, putting it all together, down 4,000 ounces for the quarter compared to the last. That is stonking Q4 back in FY23. So, but still, added with that lift in the gold price, added $21 to the bank with all the, obviously a bit of growth capital going out for Great Fingal. So growth capex was a bit high, but still adding cash to the bank, just singing along. I guess the big kicker for Westgold is waiting for this Great Fingal. That's because they're predicting that to be about a 45,000 ounce per annum mine. So not at a big bell sort of level on the ounce, but I think a lot higher grade.
Yeah.
So because I think they said production's expected first half of FY25. They did.
Great Fingal.
Yeah, they did mention the opportunity to start taking some of the ore from this flat tipping sovereign ore body up the top, which I think they're pretty close to. But it's around 300 vertical meters of development from when they started to when they start hitting the first stopes at the top of the Great Fingal that they're chasing. So 300 vertical metres times it by 1 in 7 decline. So it's about 2,100 metres of decline development. So that's a lot. So if you averaged, say over the long term, you averaged 1.5 decline cuts a day over the long term, which is pretty good going considering you got to be putting all your ventilation infrastructure in and like any other permanent infrastructure on your way down. So 1.5 is pretty good. So that's about probably 1 year away from when they started. They started in October. So I would predict, I reckon they're probably going to get to the top of that ore body around, October, November this year. So that would, so they mentioned a bloody, do you remember Bloke?
I remember Blake.
Yeah, so they've got his two sons there, Cody and Spud Wilding. They're the gun jump operators. So they'd be dropping bloody 5 declines every 2 days, sort of thing at the moment. So they'll be getting ahead now, but as they start putting more infrastructure in, so that's when they'll be hitting that. So that'll be because Great Fingal, as we know, went off. It's restarting off minimal drill holes. Like it was very high grade historic workings. They did some deep drill holes. I think there was there 12 or something. So it's a bet saying that that ore body is going to be continuous to that depth. So
yeah,
who knows? But you would predict that unless there's a big bloody fault or dike that presents itself, you'd be pretty unlucky. But
I got two comments to make on this one. One is I was just looking at the market caps today. Both Red 5 and Westgold have very, very similar market caps. Obviously, Westgold has greater production, and as a result of having producing more ounces, you've got more torque to a rising gold price environment in that sort of sense. But Red 5, you've got more assurance on cash flow generation over time with more ability to look out for a longer mine life. And Westgold's assets are a bit more complex. They're assets that have historically, under both Wayne Brownwell's and Peter Cook's stewardship, they've turned on and off mines, right? Even though Wayne sort of talked about simplifying things, Fender, Paddy's Flat, like these are assets that are kind of might need to be run that way, right? Being turned on and off over time. And so, like, which one would you rather own, like Westgold or Red 5? They're pretty different companies, different stocks, different asset base. Red 5 might have corporate appeal, but Westgold having corporate appeal is a tricky thing, which is why I think Westgold should use their stock to do a deal while it's valued the way it is.
I think looking at Red 5 is because it's one big operation, one hiccup can really have a big impact.
That's true, yeah, that's true.
Westgold have got the flexibility of 3 separate processing plants and numerous operations. So, like, if they have a hiccup one place, they can sort of make up for it elsewhere, and there's probably a lot less operational risk for them, I think.
Yeah.
But, and look, gold, big bloody, their niche is just underground gold mining and keep it simple. So, it just seems like they're setting themselves up to probably the way it's set up now, it's probably just going to continue that free cash flow generation over time. And they've sort of rebuilt the business to that point, because a lot of shitload of capital and stuff was put in the early days under Cookie, I guess, probably counter-cyclically in the merchants, and to get it to where it is today. They're probably reaping the benefits of it now. But do you think they'd complicate things and add anything else to how they're running it now? Is the question. I don't know. Are they just going to sort of keep tracking along here?
Looks like the metric for success that they're clearly, striving towards is cash build, right? That's the thing. The first thing in every quarterly is how much cash do we add, and that's the right metric to be striving towards.
Yeah, exactly. And because you think they position themselves to be in a very similar position to Silver Lake in a couple of years in terms of, keep adding $20 a quarter or $20 to $30 a quarter. You sooner or later, after 2 or 3 years, you got $500 million in the bank if they maintain the capital spend. So, yeah, I think they're pretty similar to the trajectory to what I guess your Ramelius and Silver Lake are doing, I think. So, but who's going to bite? Who's going to blink first in the M&A front? Don't know. I'm thinking based on Ramelius's history with being pretty active on the M&A front, you would think them. Silver Lake, Silver Lake are going to be forced to do something soon. Maybe Encounter will hit something there, and their 6% shareholding will come to them. Who knows? But they're gonna be forced to do something very, very soon, I think. So
watch this space, Matty.
I think they'll be holding on to a better strategy than that. I hope they are, at least, Matty.
Yeah, I don't. Yeah, God. Anyway, who knows? Some people just get lucky, right? Galena, boys. What's going on? Still in suspension for the Abra lead zinc silver mine.
Yeah, it's pretty grim. They also put out a quarterly today, but they're going to remain in suspension until the 29th of February. They've got an extra day there, mate. It's a leap year, so you can go to the 29th of February. So anyway, they're like 3 million, just south of $4 million cash as at 31 December. There, it's pretty worrying, I think, just given the debt burden there. Taurus, who's provided the finance facility, that they could be even more nervous than equity shareholders would be right now.
Is it on care, mate? Is it on the strategic reviews that operations stopped?
They're still mining, Matty. Still mining.
Yeah. Right. Friends of the show, Sayona. What's happening?
Our dear friends of the show, Sayona. So just ripping straight into this one, scrolling down the bottom to what we want to look at, cash. So they started the quarter with $232 million in cash and finished with $158. So that's down 32% in just 3 months. And then you break it down, go a bit further. Cash flow from operations, they lost 27, and from investing, they lost $48 million, or rather invested, if you ask them. On the very first page, there's 2 numbers that pretty much sum up the state of North American lithium, and that's the average realized selling price, Aussie, so not US, Aussie, $946 per ton.
Oh,
that's nasty, mate. That's it's pretty staggering. Like, convert that to US dollars, it's like
600 odd.
Yeah, $620, which is pretty wild. Cheeky of them to report that in Aussie dollars too, by the way.
Yeah, it is. But you sort of come to expect that with this company. On the unit operating costs front, Aussie $1,397. So that increased by 14%.
That's a number that
should have put that in US.
I think they did that last time. Anyway, and that number excludes freight, royalties, depreciation. Yeah. While the unit costs increased despite producing more than previous quarter and having better recovery, and then you look at the physicals, right? So concentrate produced 34,000 tonnes, concentrate sold 24,000 tonnes. So, they built inventory there, but they cited delay in the third shipment till Jan. But geez, it doesn't look good though, right?
Mate, it's pretty crazy. You look at the result and you look at the revenue line there, and you can see it's just 1/4 of what it was versus the previous quarter. Now, they do say they got a difference in the stockpiled concentrate, so that's roughly 9,000 tonnes from the last quarter. But I mean, that just equates to $8-ish million. So, and that 8 would be generous using the same average price that they use, which is, not what lithium is priced at the moment. So just taking a step back, after looking at those two numbers, it's very hard to see how this operation stays in business for much longer. And then looking through the various other items they spent cash on, it seems pretty short-sighted that they spent another $10 million on exploration, given all the headwinds. But, maybe that's like what you were touching on there with Silver Lake, Matty. Maybe that's just a bit of a Hail Mary to hope that they find something that saves the day for them.
They might be looking for gold.
Mate, anything, if it's worth money, I think it might save Sayona or keep them fighting another day. Now, like a couple of the other companies we've spoken about, they are doing a review. So they're looking to reduce the cost base, manage cash flow, and preserve financial sustainability. Now, I think it's pretty needless to say that costs should be front and center of any manager, no matter what company they're running, but I'm pretty sure they don't need me to tell them that one. And we're expecting the review results later this quarter. Gents, I'd be pretty surprised if there's any result other than North American Lithium, the asset, just going on to care and maintenance.
Mate, it's I can't. We were on the phone earlier today, and you said to me, like, why is North American Lithium still on? Like, just turn this thing off. And I'm with you, mate. This is it's clearly bleeding money right now, and like, man, unless you have a crystal ball and you tell me that the commodity prices just bounce massively, like what the hell are you doing? Just like burning through your cash, keeping it on. It just doesn't make any sense to me.
I just can't see what could be a short-term catalyst for a lithium price rebound right now,
mate. 100%. Like I don't have a crystal ball. It's tricky, but what you can do as a company is control the controllables. And, for them, they're probably thinking a strategic review might get an outcome that's better than turning it off and then trying to get an outcome. But I just think you have to be bloody prudent. Don't 100% guarantee you're going to torch all of the cash.
I think within the next 12 months, someone would have to literally go and steal all the inventory from China and dump it in the ocean or something. Like there is I just can't see a short-term catalyst coming around, unfortunately.
China restocking is, China deciding they want to restock more or something like that.
Yeah. But what's like with the inventory there, what would promote that? So
I mean, commodity prices can move in weird ways, but like you said, Trav, you just got to focus what's in your hands, and costs, the 10 on exploration, all those things, they're very much in the hands of the company, and they've got a big pile of cash. So if they can preserve that and fight another day, maybe they'll be here for the next upswing.
Beautiful, boys. Rightio. Thanks to our newest partner, VRIFY. That's VRIFY.
Verify without an E.
Verify without an E. Get a hold of them and take your bloody company to the next 3D level. Love your work. And, God, sorry, InvestorHub, you're not getting the big thing at the start of the credits anymore. So we'll switch them all around. It's all good. Thanks, InvestorHub, as well. Get onto them as well. Jeez, talk about two bloody good companies coming on board. DSI Underground, McMahon Mining Title Services, Anytime Exploration, KCA Site Services, Brooks Airways, K-Drill, and we're going to have a little special one coming in the coming days. A little repeat offender. I won't mention them yet.
Very excited.
Forward to have them back on board. Righto, cheers,
Hooteroo, fellas.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.